Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Without having because the month is not concluded, it's tough for me to say, all right, what would be an accurate retracement level? And that's where we use something like a drawing tool or a tool such as Fibonacci retracement. So we'd say from the first swing high to the retracement, we take that retracement low level, and I don't think it captured it for me, so hold on. Let me try that one more time. There we go. Okay. And so I'd say, at least maybe a 618% retracement up to a 50% retracement would put me between 130.5 and to 131.5. So somewhere in this area, the market could retrace. So the key I have to ask myself now I have a setup. The setup is, seasonally speaking, the euro retraces. Pretty cool. Next, we are at resistance. Well, that's pretty neat too. And the market could be in some turmoil after the end of the quarter. So I think that's one of the neat things also, that we know that there's probably going to be some window dressing going on, and we're going to probably see some things happening in the marketplace. After all, I think that from here, if it does continue to rally, and this is what I'm going to be the devil's advocate at this point in time, what if this is the first time or one of the very few times the euro currency does not correct and adhere to its seasonal tendencies? What then? Well, obviously, I need to employ proper risk management, so I don't want to be in a position where I can't calculate my risk. So the first thing that I'm probably going to do is I'm going to start looking at some options strategies. So I go over here to my trade desk and I go up to maybe some, let's see, EUU, hit enter. All right. Well, I'm not going to do any October options because they expire in 17 days. So possibly if the move happens by the third week of October, I want to still be to be able to participate with the trade. So the first thing that I'm going to look at is maybe the November. And one of the things that I'm going to do, one of my favorite strategies here, is a vertical. And I probably will go, and this is something that I think varies with different people. Some people like to do a two-strike. What I'm going to be looking at is I'm going to be exploring the opportunities for a credit call spread. If I'm looking for the market to go down or not advance much further to the upside, I want to do a credit call spread where my risk is defined, number one, and number two, I want to be looking at collecting some premium. So I'm going to probably be looking at the 1x3 vertical. And in this situation, I'm going to go over here and say, all right, the market's at around 136. For me, I would say, when was the last time, and I go back to my charts now, and I'd say, when was the last time we went over the 136 level? And so I'm going to go over here and change this to a weekly chart, and this is how I'm going to start to do my homework and say, wow, we had this huge shelf in this area from about February when we had that breakdown. We just saw 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 10 weeks, 2.5 months of offering that stiff shelf of resistance right around 136. So this might be a very significant resistance point. So, up there to about 142, and if I go back in time even further, which I think I'd have to go and use a futures contract, but if I go back in time, 140, it might be a little bit hard to get through immediately through the next, say, 4 weeks. So I go back to my trade, and I'd be looking personally at if I'm going to be doing any type of a strategy, I would be looking at possibly from 132.5, 131. That's not what I'm looking for. And I'm going to go up a little further, and personally, I don't see a great opportunity here, possibly looking at the just looking at this with you together, I really don't see a great opportunity looking at a credit call spread. Nothing's popping out on my screen. So now this is the way I start filtering out the trades. Normally I would like to look at if I'm going to risk at least have a 3-wide strike. I want to at least take in the next, if the market's trading, I want to be 1 strike out of the money on a credit call spread, so just to give me some safety. Normally, from an out-of-the-money situation, I don't like to do in-the-money credit call spreads because, if it doesn't work, I'm already at a disadvantage. I'm putting myself at harm's way. So I want to be out of the money, slightly out of the money, the next strike price up 136. So I'd want to be looking at maybe a 137.38.5. And, here I am. That would probably be the right strike here, and I would be selling that spread. Theoretical value is about, 58 cents. And to me, that just doesn't seem like a good enough return for the risk that I could have put on the table. I'm risking a little bit more, a little bit less than 1 to collect 2. So a 3-to-1 ratio doesn't exist here. So for me personally, I don't think I would at least try this type of strategy right now. So on the other side of the coin, I would, if I'm looking for the market to correct, and we're at 135, and we can go to 131, I would possibly be looking at buying, and when I do vertical spreads to the downside, a debit spread, those I like to be fairly close to the money. So I would be looking at the 136.34, and that theoretical price is around 68 cents, and that's one that I think is a little bit better of an opportunity. So I would probably be looking at doing the 136.34.5 vertical bear put spreads. So I have that on the horizon. So I'd probably employ some of those, and then looking at just single out of the money puts. If the market was to correct back down to around 131.5 minimum to 130.5, let's say, 131.5, I'm already paying 114. I'd want to look for something with a delta, and I can go over here and look at this, and I would probably look at a 35, and looking at the delta here, a 133.5, and look at that, and we would be paying theoretical value, probably that's going to be worth around 169, I'm going to say. Let's just see. And it is 169.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.